Hello. I hope
Yes,
everyone
hello.
can hear
This
me.
is Jerb.
Anyway, thanks.
RV's here
And
too. Hi, Paul. RV here, and I also have Jerb here with us.
hi. Good to have you guys. So anyway, we're live with the webinar now. For the participants who's with us as well, thank you for taking time. This is our webinar on transforming digital banking with APIs. So organized by FST Media and with our technology partner IBM. So just a quick introduction as to who's here with us. We have Amran Hassan, who is the head of innovation for the Maybank Group. Hello, Amran. And then we have RV De Vera, who is the head of corporate product management, transaction banking for Union Bank in the Philippines. And joining him as well is Gerb Inahada, who is their head of FinTechs and partnerships, also with Union Bank. So welcome to you both. And joining us to represent the FinTech side is Barry Levitt, co-founder and managing director of Smart Pesa, based here in Singapore. So they do work in Southeast Asia and South Africa as well. And our technology expert, we have Brett Nulf, who is the business unit executive for mobile API economy for IBM Cloud Asia Pacific, based out of Hong Kong. So hello guys, thank you for joining us. So moving to the logistics for this webinar. So the slides and recording will be shared within 48 hours after this webinar ends. For participants, if you have any questions, you have the chat box function. You can see it in one of the tabs there under Q&A, or you can also participate via Twitter at FST Media. So we'll be checking our Twitter feeds as well if there are any questions for the participants. So yeah, I hope that's all clear. And so basically, we'll be starting with just a general context in terms of where we are headed towards the digital age. So we, obviously the focus here would be banking, but if you can just look at where the trend is when it comes to customer adoption in digital, we can use something outside of banking for now, which is basically we have the Airbnb model. So Airbnb, if you look at Airbnb, it was 8 years old, but in that 8 years, they currently have a valuation of 30 billion and 1 million over rooms under their platform. So what does this mean actually? Looking at their closest competitor in the hospitality space, which is Marriott. Marriott is an 89-year-old company, and throughout those 89 years, they actually have currently a market valuation which is 10 billion lower than Airbnb, and around 700,000 plus in rooms under their inventory. We're not going to focus on like business models and such, but just looking at customer adoption in terms of digital. And another example we can take a look at is Uber. I'm sure everyone knows about them. 7-year-old company, and within that 7 years, they're currently evaluated at over 7 billion with over 1 million drivers under the Uber platform globally. And also, transactions-wise, I believe they've completed 1 billion transactions as of January this year. So if we move towards banking and where we're headed at, so we look at the banking landscape right now. So we have on one end FinTechs, which is sort of like eating up into certain parts of the banking space. Some would say, sort of like unbundling of financial services. So we have FinTechs that are focused on payments and remittances, on personal finance and wealth, advisory. We have providers of banking infrastructure, lending. And on the other hand, we have the neobanks or the challenger banks that are digitally focused or mobile-only focused. And so what does this mean in terms of where we're moving, where banking is moving in the digital age? So we actually go to this scenario by Alessandro Hattami. Alessandro Hattami is actually the the COO for Digital and Group Innovation Director at Lloyds Banking Group in the UK. He's also a serial corporate entrepreneur and FinTech mentor. So he actually came up with this 4-stage scenarios of what the future digital bank might look like. So we can use this as sort of like a model and look at the different scenarios of how banks can move forward in terms of the digital age. So first is the better bank scenario. So the first stage is, or the first scenario is a better bank, wherein customers are seeing digital as their main mode of engagement, and the banks actually realize this. So they realize the opportunities in digitalization, and they reshape their businesses towards digital. So you look at digital transformation initiatives and strategies. A lot of this has to do with the modernization of their systems, legacy systems, towards digital. It doesn't have to stop with the new front-end layers, but also how do they connect the old systems with the new. New applications that integrate with the, with legacy systems and applications. So APIs would be one, would be one of the major ways that banks that are in this scenario are actually doing right now. The second scenario is the new bank scenario. So here we have, the challenger banks that I mentioned earlier, but we also have a couple of banks that are doing this as well. So maybe market entry strategies for frontier emerging markets that they don't have a presence yet. Instead of coming in, the brick and mortar approach, they actually go through the new bank approach, wherein they set up a fully digital bank integrated with their legacy systems, or it can be completely new systems that integrate with their existing back end. The third scenario is the distributed bank model. Now, what happens here, or the scenario here, is the emergence of bank aggregators. So in this scenario, FinTechs have become extremely good at providing services in their niches. So it may be payments, loans, savings, robo-advisory, and such. And the banks, what they do here is they still provide the traditional banking services, but they also act as a banking service aggregator. So they aggregate the services of these fintech providers, and they offer services via their APIs as well. And then we move on to the fourth scenario, which is the disintermediated bank. So this one is the scenario here would be when customers shift to non-traditional financial providers, similar to Apple Pay, Google Wallet, Samsung Pay, Amazon, Facebook's, those ones which, with personalized customer user experience, customer analytics and insights. And what happens here is that banks become utilitarian. They provide, again, the traditional banking services, but the scenario here is that they don't hold the customer relationship. So, in this scenario, I think banks would prefer to go through the first three scenarios that we mentioned, or a combination of those three. So, just wrapping up here, the context now that we're in is it's definitely moving towards digital. Customers are moving towards digital channels and mobile channels. In Asia Pacific, we still have basically looking at or talking about financial inclusion, but obviously the barriers for entry for both smartphones and cost of mobiles, or semi-smartphones, if I may say so, and also mobile and internet connection, the barriers of entry are actually decreasing rapidly. So we're seeing more adoption, or we're foreseeing more adoption in that space. And what that means is that there is a big space for banks to focus on, their mobile propositions, their mobile offerings, and the whole omni-channel discussion as well. Secondly, it's also the integration and collaboration with third parties and FinTechs and also the non-bank financial providers. This is very important, and what would enable this integration and collaboration is an interoperable system, similar to what the API model actually presents. So moving forward, we actually have Brett Nulf of IBM, who will delve further into the API economy and present some case studies of some of the clients that they've worked with. So handing it over to you, Brett.
Hey, Paul. Thanks very much, and thanks for everyone on the call. Thanks for your time. Paul did a great job of setting up the core background, and in fact, on a prior webinar that was run a couple of weeks ago, also ran a poll, and I just wanted to share with you briefly a quick snapshot of one of the poll questions. What will be the biggest game changer for financial services in the year ahead? And if you can read the slide, at the top of the list is FinTech collaboration and integration with open APIs, which is quite interesting because it's being compared to things like machine learning, artificial intelligence, advanced analytics. That's always high on people's hit list. Cloud technologies, personalized offerings, and things like that. So it's quite interesting to see the audience representing APIs as quite a high requirement in terms of the investments they're making over the next short period of time. So just wanted to go through some of the slides are bouncing around. If you can, Paul, I don't know if you're seeing this or not, but okay. So it's becoming increasingly difficult for us to, as banks, to differentiate ourselves. We've got lots of competitors coming from lots of different parts of the industry. As Paul mentioned, digital banks, FinTech, robo-banks, post offices, in fact, in some places are becoming competitors. And, sometimes it seems like it's difficult for us to compete because ultimately all of our products and services can be commoditized. They're effectively ephemeral products. There's no shipping of something from A to B. It's all basically services that are in the cloud or in the sky and represented as ones and zeros. And so over time, we're seeing that the industry, a famous saying is, in the future there won't be banks, there will only be banking. That is, they will be disintermediated, unbranded services that you can get from lots of different sources. And the key to differentiating and creating a brand that's known for its innovation, that's known for its something that the customers want, is really three components. One is creating a better user experience, a deeper way of engaging with the customers. Second is creating new services that didn't exist before. Sometimes they're simply repackaging additional services, making an aggregation of them and slicing and dicing them in a new way and representing something that the customer might find interesting, such as news feeds and things like that. And a third way is to create an ecosystem. That is, to create a pool of partners which represent a very simple, easy to use, again, user experience where it's very quick for a customer to engage with the partners by way of the bank. The integration is already there, and it's a very straightforward path to consume services with bank as the facilitating partner. And you might look at examples, things like the iPhone with Apple Pay, for instance, is dead simple. So people that use that technology find this to be great. It can use many different types of payment providers, different credit cards and so forth, but ultimately it comes down to a simple press your thumb on a screen, and it can use that to transact a payment of some sort. So those are the types of things that strategies that the banks that we're working with are pursuing. And at the same time of trying to establish a better user experience, you're also seeing an explosion in maybe options about the digital channels, as well as the huge growth in the use of data. So it's changing the expectations that the customers have about how we engage with them. Used to be they were happy that we just had an ATM network. That's what we needed, just a network of cash points and branches that are close to me. These days, we need to emulate some of the fastest and most exciting digital brands in the market: Airbnb, Uber, Facebook, Google, and so forth. They're setting the bar in terms of our user experience. So we need to find ways of supporting mobile, supporting contextual user experiences with the customers, maybe utilizing things like Internet of Things, but certainly utilizing agile methodologies, be predictive in the functions that we're providing to the customers, and create a lightweight, faster approach to deploying, designing, developing, and scaling the ecosystems. So the ecosystems are important because they create. It's a bit like Facebook with a group of your friends. If your friends are all on Facebook, then you won't go to another social network because there's no friends there. So it's the same thing. If a bank creates an ecosystem of key partners around them, then that becomes the moat around the business, and the moat which prevents the customers from going to other banks. Just taking a little bit of a deeper dive into mobile in particular. Across Asia Pacific, mobile is the fastest growing digital channel by far. PCs and PC web-based accesses are certainly flattening out, if not declining. The number of mobile devices that exist versus the number of PCs that exist is now dramatically widening. The speed with which it's growing, mobile, is certainly faster than PCs, and the speed with which the mobile devices are replaced is also substantially faster. So you get a new device every two years. You get a new laptop every 4 or 5 years. So clearly, we are now a mature market for mobile. It's no longer early adopter. It's really something where it is the battleground. And if you think about your experiences with your favorite apps that you use on a daily basis, not just banking apps, but think about whichever app you use all the time. Maybe it's GrabTaxi or Facebook or Uber or something like that. And you think about these kinds of elements: contextualization, personalization, data richness. It's not just reading a catalog. It's actually engaging quite deeply and performing transactions. It's making predictions about what you might do. It's remembering what you did last time and setting up the screen that makes it easier to repeat it. It's continuously improving. So our expectation is that there's going to be a new release of a version of a software for an app every 2 weeks, every 3 weeks, something like that. And again, most banks are still looking at new releases every 6 months or every 8 months. So really focusing on how you can create a DevOps process that allows you to crank out new versions with incremental innovation very, very rapidly. And finally, building in security into the design of the application itself. Security should not be a burden. It should be part of the user experience. In fact, it should make it easier. You can use things like Touch ID or step-up authentication or multi-factor digital channels to leverage what's out there and make it easier to authenticate and certainly provide a secure, more trustworthy experience. So APIs are the key to making a good, strong next-generation user experience, and in particular mobile experience. And it's on the basis of what we call the API economy value chain. It's pretty simple. Most financial organizations and their partners have valuable business assets. They may be data, it may be financial services, transaction capabilities, might be other kinds of functions that are surfaced and made available to other developers. Now, those other developers might be developers that are in-house, or they might be in a small partner ecosystem, a series of very strategic but small set of strategic partners, or they might unleash it to a large set of many different types of business partners to try to get as much mass as possible and go for the eyeballs, as they say. So the bigger the ecosystem, the better in some cases. But ultimately, the goal is to unlock what was traditionally a monolithic system that was trapped inside the system's back end, the core banking system. Unlock that, break it down into smaller microservices, and make those available to lots and lots of developers so that they can be use to assemble more interesting user experiences for customers. And from that perspective, the concept of what is an API, that has kind of evolved over time. We started with, certainly our original core banking systems were quite monolithic. They didn't actually have much in the way of exposed interfaces. Then we started developing point-to-point integrations. We knew for this particular project, we knew we had to connect A with B. Eventually, we moved into system buses and enterprise service buses and things like that. And those are still quite important to wrapper and to protect our back-end systems so that they can be accessed in a predictable way that can be managed in the IT environment with good hygiene. But these days, we focus on what's called interaction APIs or microservices. And these services are they're more than just a systems API. They might sit on top of it. They would actually package up more functionality such that it maybe is already got business function built into it. One single interaction API might be dedicated specifically to one application, specifically to one use case, specifically to mobile and only mobile. It might pull information from multiple back-end calls, package it up into a single API, and present it as a single whole business interaction. And that creates opportunities for us to be more flexible, to expose these services to business partners, and again, to create much more interesting things with like prediction, analytics, cognitive capabilities, location services, build those into the API itself. Node.js, the JavaScript servers, is a very common way of developing interaction APIs, and it's one of the fastest growing development frameworks in the world if you're in the IT space. Now, just a quick couple of examples of these APIs as they're relating to the banking industry. These are some samples of what we've seen from our customers. Quite common now to have transactions to be able to make payments. Of course, that seems to be the first thing that gets out a project for it. We also have services that just enhance most of our business partners' sites, like a branch locator, or things like Forex exchange rates, or the lending rates and deposit rates and so forth. But it also gets more sophisticated, like eligibility calculations, especially for onboarding and know your customer type processes, and where pricing is complex, like in the insurance space. Accessing to account data, but in a protected manner, so you only see certain functions that are appropriate for sharing. The rewards management is something we do. For instance, IBM does with Citi. They have a loyalty system which the bank itself runs. But of course, digital wallets and corporate banking systems and payment services are certainly still some of the key areas that most banks are looking at, in particular because of the potential to monetize them, to create some revenue flow specifically from the APIs. When it comes to monetization strategies, there's lots of ways to look at monetization, and many of them are very quantifiable. Some of them are more qualitative in nature, if you will. So often you create an API which takes a piece of the action, if you will. Every time a transaction or a payment happens, you might take 2.5% off of that transaction. And that's one very common method during payments. But there are other methods as well, and just thinking about monetization where there's, in fact, it's a free or a freemium level for some of the services is also important. There's still a reason you would do it, and still you want something out of it, but potentially you don't necessarily need a monetization capability to justify this. So as an example, the way that Google Maps works is whenever you use Google Maps through an API infrastructure on your device, you're actually providing back to Google information about where you are and the speed you're traveling and the direction you're traveling. That information goes back to Google, which they use to do things like traffic updates, and they improve the service of Google Maps in the first place. That's a free service to me as a consumer, but it's actually collecting information back. And you can imagine all of our marketing teams would be very keen to find out more information about who is using the end user application and where this information is going. Other API monetization options, where the developer pays to use your APIs in lots of different ways, pay-as-you-go, tiered, points-based transaction fees. The developers themselves might get paid. That is part of a transaction that occurs, and they're doing a revenue share, or they're doing some sort of referral service. And indirect type of models where there's a benefit, but it's coming through by virtue of the fact that you're making additional inroads in terms of your brand, and things like integrating the customers in your commercial banking sector much more strongly with your own company. So making your top corporate customers tied directly into your corporate banking infrastructure is quite interesting. Doing partner integration and actually using that as part of the mergers and acquisition strategy over time is also something that comes as part of that strategy. So there's lots of ways of looking at how you build a business case. And in the banking industry, there's efforts to create a standardization in the space. Now the standards are useful for looking at and finding maybe a standardized taxonomy, what an API infrastructure might look like for a particular catalog, for a particular brand. But not all of these services will apply to every bank. So our recommendation is to use something like the BIN, which is the Banking Industry Architecture Network. Use that as a starting point, review that, see what they've got, and get ideas from it. But then use your own implementation to create your own best practices and something that matches your own market. Just a couple of quick examples from the customers that IBM works with. Yes Bank in India is a large bank, and they promote very significantly in their commercial go-to-market is API banking. They actually call it API banking, and they started with a relationship with a company called Snapdeal, which is sort of the eBay of India. And Snapdeal has 300,000 little suppliers that deliver product to consumers. Now, every time that gets delivered to a consumer, the issue is in that market it's all cash business. So it's collect on delivery. That cash ends up going back to into the channel, but it takes 8 to 10 days before the original supplier gets paid. So Snapdeal wanted to improve that so that they get it instantly pay the suppliers and therefore build their supplier network more. So they struck a deal with Yes Bank and basically said, can you give us a 10-day loan every time we do a transaction? We'll tell you when the delivery has been made, and then you release the funds to our suppliers straight away. And Yes Bank said, yep, that would be a great thing to do. We can you give us access to APIs to your commerce system, and we'll give you access to our APIs for the payment system. And then we can implement an ecosystem of many, many suppliers in one go. And this turned out to be what they target to be a $500 million business over the course of time. They see lots of additional opportunities here because there's a lot of cash businesses, gold loan disbursement and things like that, which is very popular in Asia Pacific. Another example is RBL Bank, who is expanding their geographic growth. They started off in the metro markets, and now they're moving into the rural markets. And to do that, they can't afford to expand all their branches and just start building remote sites. They are very much relying on their digital bank strategies. And to do this, they rely on third parties in their business ecosystem. So you can see that if you go to their website and look for the developer portal, it's all public, and you can see the types of APIs they expose. Everything from corporate payments, single payment API, there's a multi-payment API, there's beneficiary registration, so you can use that as part of know your customer onboarding processes. So effectively, many, many partners can become advocates of the bank itself, even in remote parts of the geography. So it's a great service, and you can see how much money they're starting to transact. Even freshly launched, they're upwards of $50 million a month in transactions through their APIs. One last quick example, again, trying to target new kinds of digital opportunities is something that's quite disruptive, is servicing the unserviced, finding ways to provide service to demographics, market segments that you were not talking to before, maybe because it was unprofitable or it was too expensive or didn't make sense for whatever reason. But in the case of ICICI, they were focusing on the youth market. The youth market is great. If you can get the youth market on board in your brand, then you've got a lifetime of engagement. And the problem is that the youth market, they don't come into the branches. They never visit the branch, sit across a table so you can do your KYC function. So what ICICI did was build really India's first digital bank in an app. And they download, if you're a customer, if you're an 18-year-old, you download the app onto your handset, and it instantly opens a brand new account. And you can immediately start funding the account from lots of different sources and start making payments to a partner ecosystem of retailers. So it doesn't matter how you top it up, you can immediately start paying for cinema tickets, restaurants, you can do peer-to-peer payments with your friends, things like that. And this is a very strong go-to-market strategy for ICICI, all enabled with APIs. I think in summary, we're looking at how do we build a brand that represents innovation? How do I make myself as a bank be known in the industry as innovation, as an innovative brand? And running hackathons, running developer challenges, things like that is an extremely popular way of doing this. We've worked with Citi. We've worked with, in fact, Union Bank, one of our speakers on the call later. And basically running hackathons, getting lots of third-party innovative services that have ideas that you and I didn't come up with, but they did, and we want to make sure we capture that as quickly as possible and put our backing behind it. And once you do that, you can create an API experience by promoting that brand and promoting its continued adoption. And it's very important to look at APIs as really the face of the organization. It becomes, it's not just your brand is not just bank branches and your website. It becomes actually like Yes Bank did. It is a major component to your brand. You represent yourselves as an API, as an innovative service, and therefore you have microservices available to the outside world. And this becomes core to the very being of the brand and what people put, what you put your investment and your marketing around. So our recommendations for success around APIs is to firstly look at where your APIs should be, what kind of value should they be adding to the business, how do you create business APIs that are engaging and bring more interest from the developer community, and finally, how do I manage the APIs as a product? How do I make an engaging brand, look at this as a product management discipline, and produce something that you can take to market with broadly and continuously. IBM offers services and software components which allow you to have a complete API lifecycle to be able to create, run, manage, and secure ecosystems of API partners. And we're keen to tell you more about it. So quick advertisement, if you can take a look at some of the URL links on this page, you'll see that there's a report from the Institute of Business Value on innovation in the API economy, very useful information and stories from the customer world, and also something called Bluemix, which is our microservices in the cloud. So please take a look at that. That's it from me. I'll pass the control back to Paul briefly.
Yes, hi. Thank you for that, Brett. Really interesting. And again, we will be sending the presentation slides as PDF within 48 hours after this webinar. For any questions specific to Brett's presentation or to the panel session later, just type in your questions and we'll run it through to the panelists. So again, thank you, Brett, and we now move forward to a poll question prior to moving to the panel session later on. So if everyone can participate in this quick poll question, does your organization have plans to implement API in 0 to 3 months? So that's immediate, from now to 3 months, within 3 to 6 months? Or are you looking at implementing API or adopting API for more than 6 months from now? So if you can put in your questions, and we'll be showing the poll results later on as well, just for everyone's interest. Okay. Okay, so then while you're keying in your answers, we go to our panel session with our presenters. So we have Brett joining us again with IBM. We have Amran Hassan of Maybank, Head of Innovation from the KL head office. We have RV and Gerb from Union Bank. Gerb, again, is the Head of FinTechs and Partnerships for Union Bank. And then we have Barry Levitt, co-founder and MD for SmartPesa. So the panel session will be moderated by Brett. So welcome again, everyone.
Hey, great. Thanks very much. So maybe what I'll do is I'll ask a question, and I'll turn it over to you guys. Please introduce yourself and give us a minute or so on your background, and then any comments you have on the question itself. Let me start with Amran. So starting off, how does an enterprise build a business case for an API economy? What are the elements that contribute to the business case or the ROI? How important is the monetization factors and the commercialization capabilities versus just outright qualitative factors?
Hi, everybody. So I think we're still on an early journey, certainly for Maybank when it comes to API. So in that journey, at the beginning, we really need to figure out what this API is and how we operate it, how we manage it. And therefore, at an early stage, the question of monetization is probably slightly more secondary, right? Because we're still trying to figure it out. But I think very quickly, we will need to start looking at, okay, an API is nothing more than just another product, another service that a bank will provide. And therefore, it will have to go through the same rigor as any other banking product that we roll out there. Meaning, okay, is there a need for it? Who are the customers? What is the projected number of amount of revenue that you can get from it, et cetera, right? So, and there's always two things. In fact, there's always three things that a bank, like a Maybank, look at when we roll out a new product or a new service. One is if it's a revenue uplift. So, will this API bring us any new uplift in revenues, whether it's from a CASA increase or fees? Number two is, does it reduce cost? So is this API going out there allow us to be more efficient in our operations, for example? Maybe taking away long, old legacy processes and make it more efficient. So it could be a cost play. And third, it could be a branding. As you mentioned earlier, there is also the element of, doing something like this builds a better brand for the bank and builds more trust with the customers, and therefore, the benefits come later. So it's pretty straightforward when it comes to looking at an API. Will it have a revenue impact? Will it have a cost impact? Or does it have a brand impact? And then to do that, it's pretty much traditional in terms of, okay, let's project the usage, the use case, and then do that, your typical management presentation where it's a hockey stick. Okay, it's going to be slightly slower in the first year, and then hopefully it'll ramp up in the second year and all that. So that's pretty much how we do it.
Okay, great. Yeah, that's exactly what we've observed as well. Early days, it's a collaboration of lots of different components as part of the business case, typically for most customers. A question for Gerb from Union Bank. So what do we see? What are the best practices for building an ecosystem of partners? How do we pick the partners? Do we go with a few strategic partners, or do we go for scale with like a mass market ecosystem? What kind of partners do you see as the most relevant, and how do you communicate and collaborate with them to sort of build momentum there?
Hi. Okay, so Jerb here from Union Bank. That's a very good question, and we all realize that FinTechs or these potential partners and new upcoming neobanks and the things you've actually mentioned a while ago, Brett, they are here to stay, and they are already disrupting the financial services. And this is why digital transformation is a must. And at the same time, to keep up with the pace of innovation, Union Bank, we acknowledge that it is vital to actually partner up with these financial technology companies, because we realize that their direct strength, which is agility, innovation, and very expert approach on customer experience and user experience, is sort of the Achilles heel of the banks. And for these fintechs as well, their weaknesses is the scale, the trust, which I think the banks can actually provide. So we are seeing it as a very good and lucrative and very nice partnership to work on. Having said that, regarding strategy, our strategy so far for this year was really to more of a mix of both, actually. So at first we were just partnering with whoever we can partner, and because the mindset there was that we would never know who would be the next Uber or the next startup who would actually make it big. And towards the early parts of the year, we've actually also focused on a few things that we thought were very good partnership areas, such as payments and lending. So the way we worked that out was just to really follow the money. So another thing that banks or potential institutions who are looking at partnering with fintechs as well could do is to follow where the investors actually are going, and follow where the investors are putting in the money, and so just also follow in suit and be there. So that has been mostly the strategy for us for fintech partnerships here in Union Bank.
Okay, and that's great. And I know you had a hackathon quite recently in Manila where university students and small business partners, and I think one of the winners was quite an innovative mobile app which basically had natural language interface to the banking backends. So effectively it's like a Siri is how you interact with the application, right? So you just speak, what's my credit limit, what's the 5 most recent transactions, and it will speak back to you and effectively become the banking application of the future.
Correct. That was actually White Cloak, and they've leveraged on the IBM Bluemix cloud services. And I think really the point of these of APIs and opening up the bank to such young developers and even very early startup stages during the hackathon was to actually bring agility and innovation to an industry that is decades old, right? Banking has been around for a long time, but we realized that by tapping on an ecosystem of bright developers locally, and even to a point to invite students who have bright ideas, was actually a good thing, because we want to accelerate the pace of innovation and the agility of developing new ideas and products and services.
Okay, great. Well, speaking of young, innovative services from the startup world, this is a question for Barry from SmartPesa. Barry, just tell us a little bit about what SmartPesa is, and how you grew up as a fintech. But I'm also keen to understand, what kind of challenges do you think the industry faces when implementing an API economy strategy? Is there integration with legacy systems? Is that a core problem? Are there regulator problems, security problems, hurdles there? And are there issues with too many APIs or not enough APIs? Or what are the types of challenges we expect to see, and how would we overcome them?
Yeah, thanks, Brett. Barry Levette. I'm from SmartPesa, co-founder and MD. And SmartPesa is about solving a last mile problem. which is about extending banking's existing services into very much rural areas. So it's a payments based, but enabling more than just payments. It's also about enabling cash out and other types of transactions. In effect, trying to get people who have difficulty getting to bank branches and ATMs to do transactions. And this could be anything from bill payments through to sending money to a friend or remittances. But it's the type of transactions that they would do at a branch, but the branch is physically quite far away. In terms of the integration with banks, etc., is what we've discovered is every bank's implementation is slightly different. But on the payment side, most banks conform to an underlying ISO standard. And so it's a variation against the standard that we understand. And based on our experience, which we've integrated with more than a dozen switches and banks backends around the world, is it takes us less than a week to integrate into a bank's backend typically. And then it's about approving the transaction and the end-to-end security, and then turning around, and the real challenge is the other direction. It's about opening up that ecosystem and solving the merchant issue and the building of the distribution network. And that's where the banks have typically been somewhat challenged, is how do they enable this future banking branch network, and how do they develop that over time? Because there's a different channel, which is the issue, but the plus for the banks, it's using technology and standards that they already understand. And so it's a leap of faith, but it's not a huge leap of faith for many banks. And those that have been successful with us have been those that have entered into a collaboration type mode, where there's a co-development. Where there's an outsourcing or saying, well, you go and do it, it's been less successful. And so our experience has been, particularly with financial institutions that are starting an API journey and an API strategy, is find partners that they can work with and actually co-develop the API technologies, particularly with third parties, with that technology, such as smart pesos.
Okay, yeah, that's quite interesting, and I think the security is obviously vital. Regulatory frameworks differ from market to market as well, and sometimes that's a challenging. Just anecdotally, I've seen, for instance, in mainland China, and that's a different beast, I realize, but in mainland China, they kind of have a policy that says things are okay until they're not okay, whereas in other parts of the world, things are not okay until they are okay. So the regulatory framework, for instance, in China, there were 2,500 peer-to-peer payment startups in the wild, and China was basically letting them go and letting them do their business to see how it would go and how it would grow. And eventually they had one incident, which was a substantial pyramid fraud, and then China stepped in and decided to put some regulatory framework in. Other places like Singapore, Hong Kong, U.S., elsewhere, wait until the monetary authority blesses the technology before it can go out. So you don't see many peer-to-peer net lending and so forth. So it very much differs from location to location. Just a question, switching back to Amran from Maybank again. So in your today's digitalized and mobile-first economy, how has Maybank shifted its focus towards the development of mobile applications and services, and what role does the API strategy play in your strategy there?
Thanks, Brett. I think now if Maybank was set up today, the systems, the underlying core banking and everything else would look absolutely different than what it is that we have. And the problem then is a question of integration, of how do we build is all these new capabilities, whether it's internal or coming from partners, on top of our legacy systems. And I think that's where this API, so API itself is not the end, it's just a means to an end. Meaning, if we build a robust, strong set of APIs that allows Maybank and Maybank's partners to build on top of, that allows us to build the new capabilities, including virtual banking, what have you, in terms of digital. I think the evolution, even the evolution of mobile banking is still underway. What we have today is essentially just, let's take what we can do at the branch and digitize it into mobile. But I think mobile banking in 5 years from now will look very different than just another mobile banking app. But to keep up with all these changes, that's why we need to have this API set up as a layer to allow us to be agile and nimble. So as Maybank, I think, like I said, we are early in this game, but we definitely see the need for it, because let's be real, as far as Maybank is concerned, we are not about to remove all our core banking and systems that we have for the last 30 years and build something ground up. So not having that ability means what is the best way to bridge our legacy systems to all the new things that's coming. And that API seems to be the bet that we're going to put on.
Yeah, that's a good insight, Sarah. I think we, as an industry, started looking at mobile as a subset of the functionality, say a PC offering. But in fact, it tends to be a superset. Things you can do only on mobile that you can't do or is inappropriate for doing in a PC web environment or even in the branch. And it creates all new sorts of business opportunities and services that will help differentiate. All right, so a question for Gerb again at Union Bank. So who in the organization should own and sort of manage the API strategy? Is it owned by the business side or by the IT side? Is it a team with a steering committee? And should you incorporate the opinions and sort of the collaboration of third parties as part of that, or is it something that's just managed by a single product manager that sort of runs the show? What do you think is best practice there?
Well, how we're set up right now in Union Bank in terms of who manages the API business per se is really coming from the CTO level. So it should not be a product manager or a project manager, a team somewhere in the middle who's going to manage this. I think for you to really say that you're serious about this, it should be from a top level perspective. Having said that, the CTO, however, should be closely in coordination with the business units on what the business units are actually seeing from the outside, and as well as the R&D team to see on what are the current trends, or where the FinTechs or the other financial institutions are going. So just to summarize, it's really just it should be on the top level, but how we're set up right now, it's being handled by the CTO, and they're driving the integration. As Amran mentioned, the key challenge is to actually build a layer on top of the legacy systems, and that's the role of our CTO right now. But he should be in close coordination with the business units.
Okay, yeah, we're seeing the same thing. A lot of customers are looking at, how do I build the catalog? Do I just let everyone build whatever APIs they want and let it grow organically, or should it be a tightly controlled, directed, product-oriented approach? And there's obviously pros and cons for both of them. In all cases, you want to be able to manage it, govern the process, make sure it doesn't get away from you. But allowing innovation in the definition of the APIs in the first place is often quite important as well to help stimulate growth. Okay, so question for Barry. So you are amongst the startups beneficiaries of some of the newer technologies that allow you to sort of launch cheaper, faster from things like cloud, for instance, and services that are available on the cloud. You no longer have to buy a ton of equipment and rent some space before you can get your basic service up. You can turn it on almost immediately. What importance is the use of cloud in the API economy strategy for yourself, but also from the bank's perspective? The banks often see cloud as a security issue, and I'm curious to see your take on that.
Yeah, thanks, Brett. On cloud, I mean, the one aspect is all banks have got their own data center, so they can actually run their own clouds. They can have effectively, have their cake and eat it, because they can have the benefits of scaling of new technologies in a cloud type infrastructure, but without the problems of upgrading and slow upgrading of systems on legacy systems. So what we do, for example, is we bring our system into the bank's data center and have that managed in a cloud type way, but then the bank still owns the data and has all the security, HSM and keys and control of the data and the security, but they get the benefits of cloud. Cloud model has worked really well in other industries where the industry doesn't actually own their own data center, and so the marginal cost is quite different than compared to banks. So the way in which banks should look at this is saying, how can they get the benefits of the fast turnaround times and upgrading of clouds and cloud type models, but utilizing their existing data center at quite low marginal cost. And so the way to do that is to take systems like ours and co-host it into data centers, and then trust us and their third parties to keep that updated in a cloud type way, firewalled off from the rest of their systems. And so there's a good hybrid approach for banks that's recommended.
Okay, great. Thanks, Barry. Hey, we're getting a lot of questions on the interactive chat, and we probably won't have time to address all of them. So obviously keen to follow up with each and every one of you directly if that's of interest. We'll provide some further ways of contacting each other. But let me just sort of wrap up with one last question for the speakers. And I'll open up to all three of you, anyone who has some ideas on this. What do we think that the API businesses will look like in 3 to 5 years' time? How is that going to change what our businesses look like?
Amran here. I think it will be a key role. Pretty much like today, you can ask what is the role of data analytics, and the skill that goes with it, the data scientists. What kind of impact will that have in a bank? And I think we're starting to see how important it is. Similarly, for APIs, it will be one of the key components of operating as a bank, being able to interface with all the multiple parties that's out there. That's my take.
But Barry, one of the points that we have in strategy in the various places that we operate is whether we're actually a partner with the banks or we use the banks as suppliers, and we do that in different markets. So for example, in Philippines, we collaborate very much with banks, and so we become part of the API strategy and we grow with the banks. But in other countries like Nigeria, we've effectively taken that away from them, and so the API strategy, we use them like suppliers. The API strategy, the banks have lost control of that, and the market itself develops all the API strategies. So there's almost a tipping point now as to, we look forward 3-5 years, as to who ends up controlling the API strategies. Is it the future FinTechs by themselves, and then they connect back into the banking system as suppliers, or is it done, with FinTech and banks together and grown grown forward. So we're in that kind of tipping point, and I think different markets are going to end up in very different places.
Yeah, true
Okay,
that.
so from our perspective from the bank, the way we see the API business in 3 years is that a lot of the things that are actually happening now will still continue to happen. We have the likes of financial giants like MasterCard and Visa exposing their core functionalities as available services for developers or potential startups to leverage on, and we would see that happening continuously, and perhaps a lot of the other banks also would follow suit, and financial institutions would also follow suit. So that's how we're seeing it. Another thing that we are seeing is a more collaborative world. I guess as you guys mentioned earlier, the bundling of the bank products, so it is apparent, but there's also this concept of rebundling of the products together, and I believe that that is going to be enabled by APIs, and we will notice that the API economy would revolve more around collaboration instead of being actually FinTechs out there to eat the lunch of the corporate or the banks. It's going to be a more collaborative landscape.
Okay, thanks very much, and really sorry to run out of time. With a great set of speakers, you guys are all experts in your field, so thanks. Appreciate your time. I'll turn this back over to Paul.
Okay, thank you. Thank you, Brett, RV, Jerb, Amran, and Barry. We do have a few questions, but due to the lack of time, we'll just have to reply to your questions offline. And I'll be sending your questions to the panelists themselves, who will be able to take it up, because we have questions on security, on what important points of banks would need to adopt API. We have sort of like the regionality of API adoption as well, so it has a bit of regulation coming in there. But then again, thank you everyone, and just to wrap it up, again, we saw, or we took a look at where financial services is heading towards digitalization. We talked about bank strategies, and basically how APIs would be the digital glue that connects old legacy systems and applications to new applications. It's, again, the digital glue that connects banks with the new entrants in the market. And it also enables better use of information, both internally in the organizations. You're looking at, product or mobile app development, for instance, or anything that comes with application development. There's a lot of potential with using APIs, a lot of benefits as well, and you can even, monetize APIs in terms of looking at different revenue streams, as what Brett covered earlier in his presentation. So before we wrap up, I know we're a few minutes overrun, but just going to show the poll results earlier in terms of does your organization have plans to implement API? So a majority, more than half actually, is looking at implementing API within the next 3 months, which is good because, the disruption is already happening, and it just goes to show that there is activity in the market right now, especially for the banks, the financial institutions, to move towards this. So we have one final poll question, just if you would be open to a free API consulting opportunity to discuss your API adoption strategy. You can just quickly answer yes or no, and we'll have someone get in touch with you from the IBM team. They've done a lot of work with with banks throughout the region, with Citibank's hackathons, with Yes Bank in India, and such as well. So if you would be keen to engage with the IBM team for your API strategy, we would very much love to connect you with the relevant people in the team. So lastly, just on the logistics again, we'll be sending the presentation slides via PDF as well as the audio recordings to this webinar to everyone who's registered. And if you have any questions, just feel free to get in touch with the FST Media team, and we'll get back to you right away. So again, thank you very much to everyone. Brett of IBM, Amran of Maybank in Malaysia, to RV and Jerb of Union Bank in the Philippines, and also to Barry of SmartPesa here in Singapore. So on behalf of FST Media and our panelists, thank you everyone for taking time to attend this webinar, and we look forward to having you again in our events and webinars in the future. Have a good day, everyone. Enjoy your lunch. Cheers.
Thanks.
Thanks, Paul. Thanks, Brett.